Hard work, the most raw and obvious way to reach something. Maxime Lagacé. Now, here at Charting Wealth, what do? We work hard every day, 10 to 15 minutes. And the real difficulty with all this is finding that time on a daily basis. I have to tell you, every single day the market is open, you've got to spend the time. If you don't do that, you will not get the nuances of what we do. You won't learn the basics well. And that means you won't be able to follow the charts well. And that means you'll make mistakes. And that means your practice trades won't be successful. And if you're foolish enough to try to enter into real money trades before you can even do practice trades successful, then of course the money will soon run out. So what do we ask? 10 to 15 minutes a day, follow these charts, practice trade to show yourself approved. And then at some point down the line, when you take everything we've taught you, you've read other places, you've studied, you've learned, you've created your own methods, and we encourage that all the time that work for you and your schedule and what you care about and the stocks, ETFs you're interested in, then and only then can you start looking at trying to use this as a way to make money. We're not a stock calling service. We're an education firm. We want you to study with us. Study to show yourself approved. Let's jump into these charts. I'm very happy to report that my S&P 500 trade that I got in on when we had the crossover going up. I hope that a lot of you practice traded that. Mine closed out today successfully, up about 3% on a half X factor trade. And in fact, I've got a great training for you today in your show notes. It is on using order size to control risk. In this environment, I didn't use my typical order size, which is around $100,000 to $200,000, but typically around $100,000. I did 50. Why? Because of my concerns about the market, where things are, the volatility, all that stuff. So to reduce my risk, I reduced my order size. I want you to practice trade that too. And I want you to pretend and again, to make your training really, really as realistic as possible, it's necessary for you to really invest that money, those virtual dollars, with the thought of multiplying them, not just throwing make-believe money out there, because that's what it is, and just, letting it go, but really acting like, look, I've got to succeed at this. Be invested in what you're investing in. That's very, very important for your practice trades. Mine successful, as almost all of our weekly vertical crossovers are, time and time again. Of course, we had a few doubts there that week ending the 15th when we had that green spinning top and things weren't going up. Went up, though, nicely last week. Peaked out today, got me out of there at about the $301.10, something like that. So that was pretty, and it did that early in the day. That's quite nice. That's why you put in a good till canceled sell order at your profit band or bands. And again, please make sure to take all of the training. If you're not signed up at our website, you subscribe every day. If you're not doing that, then of course you're not going to get our trainings that are sent out to our subscribers. You do that for free. What do we see the week starting off with the S&P up 1.27%? We have a nice green up candle that is forming on our weekly chart. That price percent oscillator still clicking up about the same angle. Derivative oscillator gaining upward momentum. That's nice to see. 2-day chart. Again, just continuing to move up. Derivative oscillator gaining upward momentum. Now remember, this is the first day of our latest 2-day candle. It is a Tuesday. Markets were closed on Monday here in the States. So we see that we have a green up candle going higher. That is nice to see. That looks nice. We go to the 4-hour chart. We dig down a little deeper, see where things boomed up in the morning, where my position was sold out for a profit, and then sort of slacking off in the afternoon. But again, prices well above the weekly and above that 2-day. That is nice to see. Let's keep moving through these charts. The Qs up earlier in the day, but down by the end of the day, 0.27%. we see the price percent oscillator falling off just a little bit on the weekly chart, derivative oscillator gaining upward momentum, reaching a higher high, and a green up candle forming again just the first day of a 4-day candle because we were closed on Monday. And we see that 2-day chart pushing up. A nice 2-day trend line is forming. And we see that the price percent oscillator is flat, derivative oscillator just about flat too. Going to be careful. We're not going to draw that trend line to the last candle until it finishes drawing on Tuesday. So prices above the weekly and the 2-day. We go to the 4-hour chart, and again, we see up movement in the morning, pull back in the afternoon, red spinning top, derivative oscillator crossing over, going down in the morning, accelerating in the afternoon, price percent oscillator also crossing over, heading down, still above the weekly and the 2-day. But again, keep your eye on the cues. And again, it's been good to us. It's been so good to us. But watch, if you're still in that trade, you've done quite well from around the 215 mark to the 233.57. That's beautiful. So again, keep watching. And remember, you can pull your trade at any point when you're happy with your profits in your virtual trade. Now, let's move on. How about our weekly vertical crossover on Friday on TLT? How many of you have jumped into TBF, Tango Bravo Foxtrot? Of course, that is the inverse of TLT, the 20-year bond. This is the short, and of course, it's going up as 20-year bonds are going down. That is nice to see. Now, I always stick with my main charts. I don't flip over and use those. I'd rather see the bigger fund and what the real flows are in that. I don't switch over to the inverse fund. I just don't. If it's inverse, I still watch the main fund, which is TLT in this case. So we had that weekly vertical crossover. We see that things down, starting off 1.34 for the day. So that is nice so far. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. First day of this 4-day candle. We see the 2-day chart, first day of that one, down. Price percent oscillator had flattened. It's going down more now. Derivative oscillator losing downward momentum. Go to that 4-hour chart. Getting close to crossing over, going down in the morning, down a little more in the afternoon. That is sweet to see, is it not? And again, if you were waiting, of course, you could have checked things out around 10:30 or so. You could be waiting for things to cross over, which they did at the end of the day. That was another point that you could have looked to jump in. But it is hard to beat that weekly vertical crossover, is it not? It did not look that way on Friday because that 4-hour chart was moving up. But again, just uncanny, is it not? When that weekly vertical crossover occurs, how sweet it tends to be most of the time. And remember, the charts work until they don't. Lastly, we go to gold. We look at this weekly chart on gold. What do we see there? Well, we see the price percent oscillator heading down, starting the week off that way. We see the candle forming, pushing through the weekly trend line. Derivative oscillator still positive, losing upward momentum. We go to the 2-day, and of course it's pulling away from the red signal line, heading down. Again, it's pushing through that weekly trend line. Also, derivative oscillator has gone negative. We go to the 4-hour chart, and we see it again down in the morning, further down in the afternoon. Well, it plumbed the low pretty much in the morning. And then we see the candle itself down more in the afternoon. And let's see, did we reach the low? Was 160.69 in the morning? Same in the afternoon. So again, what are we waiting for on gold now? Well, that 2-day chart is negative, and we see that weekly heading down. So we'll continue to watch and see. Maybe gold will cross over heading down. Give us a chance to practice some put options. Also, for those of you thinking about subscribing for free at chartingwealth.com, guess what we're going to be doing for you later this week? Relaunching parts 1 through 3, Options Made Simple, the Charting Wealth way. So go ahead and sign up at chartingwealth.com. Let's move on. Bitcoin taking a hit, man, down 3.56%. Look at that solid red down candle. We can see where things have been sliding sideways the last 3 weeks, and now we've got a fourth week. Things are flattening on the price percent oscillator, derivative oscillator, losing momentum for the first time in many, many weeks. Again, started losing downward momentum, which of course meant it was gaining upward momentum all the way back on after the week ending the 9th of April. And this is the first time we've seen the derivative oscillator losing upward momentum. And a red candle forming for the first time since all that down movement took place starting in late February on into March. Now we go to the 2-day. We see, again, third candle forming, red solid, red down candles. We see the price percent oscillator heading down, derivative oscillator losing upward momentum. And we see that 4-hour chart, which crossed over way back on Monday the 11th of May. Again, it has never crossed back over going up. We kept hoping that it would. So again, pay attention to what's going on with Bitcoin right now. It had peaked, all the way up to, $9,978, and then dropped, tried to peak back up again, and has now failed a second time. So watch Bitcoin, see where it is going, and pay attention in particular to that weekly chart. Now we go to real estate up 3.75%. And check out the weekly. Just springing up. Is it going to cross over going up? It's trying to. Now, this is just the first day of a 4-day candle, but a big green, a nice size green open box candle with a wick on top, no wick on the bottom, derivative oscillator going into its third week of upward momentum. So we'll pay attention. Maybe you'll have a crossover there. You look at the 2-day chart. What do you see there? Of course, bounced off the red signal line back on the 15th of May and pulling away. Check out the first day of this latest 2-day candle. Quite nice. Go to the 4-hour chart. What do you see there? Up in the morning, about the same in the afternoon. So go real estate. Now again, how long is that going to keep going up? Can't tell you, because it sure has gone down a lot. But again, and it may have a lot further to go down. But guess what? We let the charts lead us. And if you're interested in practice trading real estate, you might keep an eye on that by the end of the week. Now we go to black gold, as it's known as oil in today's world. Black gold in the past. What do we see going on there? Price percent oscillators about flat on the weekly chart. Derivative oscillators still barely negative. Have a little green candle that's forming. Black gold oil was up 0.35%. Go to the 2-day chart. Of course, it crossed over back on the 15th, but we see things sort of just hanging out from the 21st on, just sort of sliding sideways. So we'll continue to watch, pay attention, go to that 4-hour chart. And of course, it peaked back on Thursday, the 21st of May. Sort of been heading down since then. So we'll keep our eye on oil, not up too much. But in particular, we're going to really keep our eye on real estate when it comes to that 4-hour chart. See how much Bitcoin's going to blow things off with that price percent oscillator going flat. And then, of course, keep an eye on gold. Continue to keep an eye on the S&P, the Nasdaq 100, and of course what most recently came into play was that weekly vertical crossover going down in bonds. So that's where we are, folks. Thank you so much for being with us. Sent out a bunch of books today. If you hadn't purchased the second edition of our book, have at it. And guess what I'm going to do by the end of this week? I'm going to give you the numbers on potential virtual profits since the beginning of the year through the end of May on our weekly vertical crossovers. So far, not a single one has failed us. I think last year we had one failure, maybe two. Folks, it's just magical. And that's why we talk about the magic of the weekly vertical crossover. It's the trends, my friends. It's the trends. It's not trying to do that little day trading where you're trying to find anomalies and trade on inefficiencies in the market. It's following the big trends, and they're not that hard to see when you study and you learn. And you want to learn quickly, our book, Charting Your Way to Wealth. And of course, all the free trainings we put on a daily basis to everyone who subscribes for free at chartingwealth.com. God bless. All the best from the whole team at Charting Wealth World Headquarters.